Hey guys, what is up? Welcome back to my channel. I'm really excited for this video because this video will kick off an exciting playlist. This playlist will be focusing on the market research lessons from the market research themselves from Jack Schwager's book. In Jack Schwager's best-selling book, Market Research, Jack Schwager interviewed some of the best investors and traders in the world, which he called them market research. And in this video, I'll be sharing with you the market research lessons from Michael Marcus. Over a 10-year period, he managed to multiply his company account by 2,500-fold. You heard that right, it's 2,500, and it's not even 2,500%, it's 2,500-fold. And it has also been said that Michael Marcus managed to turn $30,000 into $80 million. These are the kind of achievements that only the best investors and traders in stock market can achieve. And that is why in today's video, we'll be taking a look at the lessons from Michael Marcus himself. These are the 5 lessons from Michael Marcus. Make only the best trades, when to sell, risk management, things he focuses on for stocks, and the last one, traits of a good trader. Now we'll be going through these individual lessons in greater detail. Just a quick note over here, smash the like button because it will really help the channel grow and allow me to produce more content such as this. Okay, now let's take a look at the first lesson from Michael Marcus. The first lesson is making only the best trades. Michael Marcus mentions that we should cut down the number of trades and only make the best trades. There's a tendency among novice traders to overtrade. And when you overtrade, you also be taking suboptimal trades. And by taking suboptimal trades, you're more likely to lose money. And this also means that when the good trades come along, you will have less capital to allocate to those winning trades that can help you generate returns. And that is why Michael Marcus only wants us to focus on the best trades. So what makes up the best trades? According to Michael Marcus, we should focus on the fundamentals, the technicals, and the market tone. For fundamentals, Michael Marcus takes a look at the macro conditions, which is the bigger trend in the market. So he will look for the imbalances in supply and demand, because these imbalances in supply and demand usually leads to the major moves. And for the technicals, the chart must be aligned with the direction of the fundamentals. So for example, if the fundamentals are indicating that the market is likely to head up, then we want to see this reflected in the price charts. So the fundamentals and the technicals should go hand in hand. And for the next one, it's market tone. So how Michael Marcus pays attention to the market tone is that he checks the news and the market. So when the news comes out, the market should act in a way that reflects the right psychological tone. For example, in a bull market, the market should shrug off bearish news and respond vigorously to bullish news, and vice versa. So in a bear market, the market should shrug off bullish news and respond vigorously to bearish news. These are the 3 things that Michael Marcus pays attention to when making the best trades: the fundamentals, the technicals, and the market tone. So if all of these 3 things are aligned, then he knows that he's making the best possible trade that he can make. The second lesson is when to sell. According to Michael Marcus, we should get out when the volatility becomes too high. A scenario that he gave was back in the days where limit up days were more common than now. So when Michael Marcus experienced too many consecutive limit up days, he would get out of his positions in the market. On top of that, if a position doesn't feel right as soon as he put it on, he would have no hesitation to sell his position and get out. Because he knew that he could always get out first, and once he was more confirmed about his position, then he could always get back into the markets. The third lesson is risk management. There are 2 things in risk management. The first is position sizing, and the second is stop losses. And on top of that, Michael Marcus wants us to pay attention to our equity. If the trend in our equity is down, we want to cut back on our trading and reevaluate our positions. Because sometimes when we are trading, we might hit a losing streak. And a losing streak will mean that our equity will be trending downwards. So when that happens, we want to cut back on our trading and reevaluate our positions. On position sizing, Michael Marcus has this to say: always trade less than 5% of your total capital on any one idea. And this is where many traders, including myself, get wrong from time to time. Because Michael Marcus mentions that 2 different positions on the same idea is still under the same one idea. So for example, if you're bearish on the market, you might short the market and buy puts on the market. Even though these 2 positions are different, they are still acting on the same one idea. According to Michael Marcus, our total trading position acting on the same one idea shouldn't exceed more than 5% of our capital. The next thing is stops. Michael Marcus mentions that we want to use physical stops for every trade, right? So hard stops and not mental stops. There's this debate whether we should use hard stops or mental stops. Because the people who advocate for mental stops mentions that if we set physical stops, our brokerages will know where we set our stops, and there's a probability that our stops will get taken out. But Michael Marcus believes that the advantages of a physical stop outweighs its disadvantages, because having physical stops commits us to get out at a certain point. The fourth lesson are the things that Michael Marcus pays attention to and focus on for stocks. He focuses on the macro trends, smaller cap stocks, high EPS, and low PE ratio. For macro trends, he takes a look at the market trends and the industry trends. He will take a look at all of the different markets and the different industries, and from there, he selects the ones that he believes have the greatest potential to move ahead in the future. After deciding the markets and industries that he wants to get into, the next thing that he pays attention to are smaller cap stocks. And the reason he gave for paying attention to smaller cap stocks is because these smaller cap stocks are not dominated by big professional traders. Because he believes that these big professional traders are like sharks eating one another. So as much as possible, he wants to avoid these big professional traders and invest in smaller cap stocks. The next thing that he pays attention to is high earnings per share or EPS. I have a video over here on EPS and what EPS means and how you can use EPS in the markets. For EPS, Michael Marcus wants to look at stocks with high EPS plus market share potential. For market share potential, Michael Marcus wants to look at a company who has still room to grow in its own market and not yet near saturation point. After selecting the markets and industries that he believes will take off in the future, focusing on smaller cap stocks with high EPS, the next thing that Michael Marcus pays attention to is low PE. So he wants to see a combination of low PE together with high EPS. The high EPS will confirm that the company has a strong earnings growth pattern, but at the same time, he also pays attention to the PE because he also wants to see how much the market is paying for that earnings growth pattern. So these are the things that Michael Marcus focuses on for stocks. For the fifth lesson, he shared the traits of what he believes constitute a good trader. These are the two traits that came up in his interview with Jack Schwager. It's being open-minded and courageous. To be a good trader, we can't be rigid. Because there are a lot of things to learn in the markets, which means that we will constantly be making mistakes. We need to be open-minded to take in information that may be difficult to accept emotionally, but which is true. The second trait is being courageous. Michael Marcus mentions that we need to follow our own light, which is following our own trading style. Because as long as we stick to our own style, there will always be advantages and disadvantages of a particular style. If we do not have the courage to follow our own trading style that is aligned to our character and personality, and then try to incorporate someone else's style, we often wind up with the worst of both styles. So Michael Marcus mentions that we have to be courageous in that aspect. The next thing is, like I mentioned earlier on, we'll be constantly making mistakes in the market. So we have to keep going even when the going gets tough. We have to be courageous to take in information without getting influenced by opinions. But then again, there's this fine line between not being easily influenced by other people's opinions and being open-minded to other people's feedback to improve. So these are the traits that Michael Marcus believes make up a good trader. Hopefully you guys have learned a lot from this video and the lessons from Michael Marcus. If you want more videos such as this, make sure you subscribe to my channel because each week I release new videos about investing, trading, and the stock market. I'll see you in those other videos. To your financial success.